All right, today we are diving deep into a really interesting Swiss fintech called Yapeal. We're going to pull it apart and see exactly what makes it tick.
So here it is, Yapeal. Now at first glance, you see a clean, modern logo, but what's hiding behind it is a company that's really pushing the boundaries of what it even means to be a bank in Switzerland. So what's the story here? Why is their approach getting so much attention?
To really get what Yapeal is all about, you have to look at its journey. It didn't just pop up overnight as this complex engine. No, it started out as an app for everyday people. And then, over time, it pivoted into something way more fundamental for the industry.
And they moved fast. I mean, look at this timeline. They were founded in 2018, and just 1 year later they snag a Visa principal license. That is a huge deal. It means they can print their own cards, no middleman. But the real earthquake moment? That was 2020. They became the very first company to get this new Swiss FinTech license, and that changes everything.
Okay, this special license, it isn't just a footnote in their story. It is the absolute core of who they are. See, it's not a full-blown banking license. Think of it more as a special rulebook that Swiss regulators created specifically to spark innovation and keep their legendary financial industry on the cutting edge. Let's dig into what that actually means.
So, the top financial watchdog in Switzerland, FINMA, came up with this. It's basically a regulatory sandbox. It gives companies like Yapeal permission to hold public money, up to a point, without needing the mountain of capital that a traditional bank has to have. It's a framework that's built for agility and for trying out new things.
But, and this is a big but, this sandbox has some really strict walls. Yapeal can hold up to 100 million Swiss francs, sure, but they are forbidden from acting like a bank with that money. They can't invest it, they can't pay interest on it, and here's the crucial trade-off. Because they're lighter and more nimble, there's no deposit insurance, and they have to be completely upfront with their customers about that fact.
Okay, so with that special license in their back pocket, Yapeal goes to market with two very different strategies. This is how they actually make money and who they're selling to.
So on one hand, you've got their embedded finance model. In this world, Yapeal is completely invisible. They're the engine. Another company, say a different bank or a new fintech, pays them to use their technology to launch their own card programs super quickly. But then, on the other hand, Yapeal also sells direct accounts, offering their own branded cards and accounts straight to businesses. So yeah, they can be the engine or they can be the entire car.
So how on earth does all this actually work? It's time to pop the hood and take a look at the technology. What's this engine actually made of?
Now, before we get into the nitty-gritty, just let this quote sink in. Zero downtime since they launched in 2020. In the world of finance, where a single second of an outage can be catastrophic, that is a massive, massive statement about how solid their tech is.
And this is why. Their whole system is cloud native, which just means it can scale up or down instantly. It processes transactions in real time. It has a built-in, regulator-approved system for verifying customer identity. But the most important part? It's API first. That means it was designed from day one to be like a set of Legos so other developers can easily plug their own ideas right on top of it.
Okay, so we've covered the special license, the two business models, and the tech that holds it all together. But, so what? Why does any of this actually matter? Let's get to the bottom line. Why would another company pick Yapeal? First things first, money. Yapeal says it can lower the cost for a new fintech to get started in the notoriously expensive Swiss market by a whopping 70%. That is a huge barrier to entry that they just erase. Reason number two is speed. They can help companies get their products to market 50% faster. In the tech world, launching months ahead of your competition can be the difference between success and failure. It's everything.
And finally, proof. This isn't just the theory on a PowerPoint slide. Over 850 businesses in Switzerland are already using their services. That tells you the market trusts them and the model actually works.
So when you boil it all down, here's the magic trick. Yapeal takes all the hardest, most expensive parts of launching a financial product, getting the regulatory license, building the modern tech, getting access to Visa, and they bundle it all into one neat package. They're not just selling technology, they're selling speed and simplicity. And that kind of leads us to the big final question here. We're seeing finance become less of a place you go to and more of a feature that's just built into the apps you already use. If that's the direction we're headed, could this model, a licensed, tech-first engine that powers everyone else, be the actual blueprint for the future of how finance is built?